Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, we are going to talk about the fierce demand and competition that buyers are having right now for housing. And it is probably going to get worse despite what the Crash Bros tell you. We have a ton of slides, bunch of data, and it's going to be super fun.
Right. So if you like slides, if you like data, hit the like button and the subscribe button so that you get the opportunity to get more of these videos. Also helps the channel, hopefully gets more people on the channel.
Yeah, all you have to do is hit the share and like and all that stuff. That's all you have, and then just watch. Okay, here's the headline. This is a bunch of NAR data. Housing competition remains fierce. So what they did here is they pulled a bunch of all the data from August, put it together, and compared to historic other Augusts, I guess, and historic months, and came up with this data. What's interesting is, of course, the Crash Bros are in full force because there's not as many houses on the market historically, and interest rates have dropped. So they're wondering why like 30 million houses didn't sell in August. It must be because of the housing crash and soft buyer demand. We're going to go through the data and show that that's not true. Okay, here is the first quote from the article. Despite a sluggish summer for home sales, potential buyers are still facing pockets of steep competition in some parts of the housing market. Okay, now this is nationwide. 60% of home sellers nationwide sold their home in less than a month. A sign of strong buyer demand according to the latest Realtors Confidence. Oana, back during the housing crash, did 60% of home sellers sell in their first month?
No, they didn't. And the thing to keep in mind is, so we've got 60% of sellers selling in a month, and then we've got about 4 months and change of inventory altogether. Now remember, a normal market, a healthy market is somewhere around 6 months of inventory. So we are heading in that direction. We're not quite there yet. So that means that there's room for more inventory. So even though inventory is climbing, which is natural this time of the year, there's room for more inventory.
Inventory has been dropping nationally. It does every year.
Actually, it's been growing right now.
No, I'm sorry. Inventory is growing.
Yes.
It grows every year. We're 2 to 3 weeks away from that turning the corner, and it's starting to shrink all the way into next spring. That combined with interest rates having dropped pretty substantially in the last few months, I think is going to be pretty crazy. Here's another thing. This is also from the article. In areas where competition remains high, some home buyers are still waiving contingencies to make their offers stronger. For example, 18% of buyers waived the inspection contingency and 28% waived the appraisal contingency in August, according to our data. Oana, if you're in a buyer's market where the buyers have hundreds of houses to choose from and they get to negotiate all the terms that they want and get a deal on the house, like the Crash Bros claim is happening, why are all these people waiving inspection and waiving appraisal? Why are they doing this?
So they're doing it to make their offers more competitive. I think what's really interesting is that waiving inspections, to me, is out of the question because you want to know what you're getting into, right? I mean, it doesn't mean that you're going to ask for repairs. It doesn't mean that you're going to ask for concessions, but it does mean that you know what you're purchasing. And then as far as the appraisal is concerned, that tells me that people have cash to spare. So what I mean by that is that when people are waiving the appraisal, they're saying, hey, I don't care what the house appraises for, I'm willing to pay the agreed upon price. That means that if the house by chance does not appraise, that buyer will have to come out of pocket with more money for their down payment. That means that the buyer has the money to come up with the extra money for the down payment. So I thought that was very interesting.
Okay, here's a question for the average person who probably doesn't understand how appraisals work. House is listed for $500,000. You make an offer for $500,000, you get accepted. The appraisal comes in at $490 for the lender. Isn't that the government stamped official value of the house? And if you actually pay the $500,000, you're overpaying.
So you are paying for the house what the house is worth to you. So clearly the house was worth $500,000 and that's what you're paying. As far as the $490 is concerned, that is the number that the lender will use to base your loan on. So let's say that you're putting down 10%, because I like easy math, that's $49,000. But because the house appraised for less than the purchase price, you're coming up with the 10% of the loan value, which is $490. So you're coming up with $49,000 plus the $10,000, the difference between the $490 and the $500, which is what you've agreed to. So you're coming up with $59,000 rather than $49,000, and that's what I meant, that the buyers actually have cash to make up the difference between the purchase price and the appraised value.
Okay. Speaking of cash, here's another quote. We've got some great charts after this. You're going to love it. Home buyers are also increasingly facing off against cash buyers. 26% of buyers in August paid cash, much higher than the historical average of 15%, according to our research. Those in the haves, compared with the have-nots, are doing well, Yun says. Record high stock market wealth, along with record high housing wealth, allow for more cash purchases. Oana, if someone in government says, I'm going to give you some money to help you buy a house, and they give you $20,000, $30,000, but then you write an offer and then 5 other people write offers offering cash, where do you think you rank? Do you think they'll feel bad for you because you don't have much money and they'll give you a shot, or what?
So sellers want to know that their transaction is going to close, and they're going to do what it takes to diminish the chances of the transaction not closing. So clearly a cash purchaser has an advantage. That doesn't mean that the seller is going to take substantially less money. It just means that if the seller is being offered the same amount or very, very close to the same amount between somebody with financing and somebody with cash, they are much more likely to take somebody with cash. You will find every once in a while a seller who, for whatever reason, feels a kinship to the person with financing. Particularly, I see this more with VA financing than with anything else, where you've got a veteran who would rather sell to another veteran. So I do see that. I don't really see it for other types of financing. So I do see that. It's very, very rare even in that case. But even in those cases, the VA seller will pick cash over not cash, even if it's a VA, but they will generally, I shouldn't say generally, but they will occasionally pick a VA buyer over a conventional buyer if the money's pretty close.
Okay, here is the first chart we're going to talk about. This is the amount of checkable deposits, meaning money in bank accounts, checking accounts, savings accounts, cash, that people have access to, the government can see. And this is households. This is not, corporations or anything like that. Okay, they started tracking this in the mid-1980s, around 1986 or 7. And people have had on average about $500 billion, $500 billion. If you look at this chart, something happened in 2020. I wonder what that could have been. Maybe it was, I don't know, something. But all of a sudden, the amount of cash people started holding on to jumped up to $4 trillion, with a T, trillion, $4 trillion. If you don't believe me, it says on the chart, the units are millions of dollars, and there's 4 million. So millions of millions are trillions, okay? Thousands of millions are billions, trillions, Oana. All of a sudden, a lot of people have a lot of cash that they are sitting on, and what are they doing with the cash? What are some things people can do with the cash?
So people can invest the money, or people can spend the money. Now, when you run out of things to buy from Amazon, and believe me, a lot of people have run out of things to buy from Amazon.
Yep.
Then people save. So I realize that our savings rate is not maybe what it is in other countries, but for U.S., we are sitting in almost at the very peak of the most money that we've ever sat on, to your point, in cashable, checkable deposits.
What about actual cash? Like, I'll give you an example. You have your landscaping redone. The landscaper tells you it's 10 grand. He's going to redo the whole yard. It's going to be amazing. You either pay with a check or cash, but even if you pay with a check, the landscaper probably is cashing the check instead of depositing it, so he can pay his guys in cash, right? And then he's got the cash. So there's also something the government doesn't track, which is how much actual cash people have.
Right. So, the government certainly has estimates on that, but that's not what we're looking at here. We're looking at cash that is sitting in documented accounts.
Okay. Also, There's this other thing called money markets. Oana, I've got a chart up. It shows historically, now if they didn't start tracking this, it was zero until the 1980 when they started. Money markets became a thing, which are just basically like mutual funds that are invested in super, super risk-free stuff that pays like 2, 3, 4%. Like historically, money markets pay like less than 1%. But all of a sudden, if you look at this chart, you will see that something, it started going up, and then all of a sudden something happened in 2020. Don't remember what that was, but you can see it's 6.5 trillion, 6.5 trillion in money markets. So people have their money in between money markets and checkable deposits. They have over $10 trillion of cash. Now remember that the total amount of, you could literally pay cash. People could buy houses for the next 10 years and buy them all for cash with that money.
Right.
Why would they do, why are people putting their money into, why are we seeing the numbers go from 15% historical up to 25%? It's been that for a couple of years now. Why are people all of a sudden putting cash into real estate, driving up prices? Why is it likely to continue?
So people have been doing that for the last couple of years, largely because of inflation and because of interest rates. So you put the two together, right? So somebody who doesn't want to pay higher interest rates and wants a hedge against inflation, so that makes sense that then they would put the money in real estate. Like Todd said, this is really interesting because between the cashable deposits and the mutual funds and that sort of thing and the money markets, these are all verifiable data. So, and that's the money there. And we have, of course, a whole side of the economy that is not verifiable data between, gratuities paid at restaurants, right? When people pay cash or, whatever. I mean, because there is a whole side of the economy that is a cash economy, and that's not accounted here.
If you are wondering why that we are not building homes like crazy, and here's the answer. New home builders build between 600,000 900,000 new homes a year. Now remember, they're also replacing about 125,000 a year. They're just destroyed, right? We just had a hurricane in Florida. It took out a bunch of houses. The numbers in the new home permits include rebuilding all those homes, okay?
Sure.
We have 140 million single family homes in the US. We're replacing them at like 0.5%. Like we're adding onto the US housing inventory 0.5% a year, but the US is growing population-wise at like 1% a year. So we're literally growing twice as fast as we're adding single-family homes. So if you've got $10 trillion and you don't know what to do with it, it's sitting in your checking account making a couple percent or in a money market making a couple percent, you could probably, and you want it somewhere safe, maybe you go out and buy houses. So we're seeing a lot more investors buy houses. They're not all paying cash. Yes, there were some hedge funds, but forget the hedge funds. The hedge funds do not have $10 trillion. The people watching these videos have the $10 trillion.
That's right.
Now, here's another thing, Oana. If you took the stock market, and people go, Todd, the stock market. The stock market is, people are making the money in the stock market. If you took the top 7 gainers out of the stock market.
Right, the FANGs.
We also had to add NVIDIA, right? If you take all them out, I guess we threw out Netflix and we put in NVIDIA because Netflix kind of, right? The stock market's not doing that great. For the past 4 years, the stock market's, a couple tech stocks, basically, high multiple stocks have pretty much taken off and driven most of the overall gains. But a lot of people are like, if you're not invested, like if you don't have a little piece of your portfolio in a bunch of tech stocks and Tesla and things like that, Apple, etc., you probably haven't done extremely well over the last few years. So maybe you want to mitigate that, and you're maybe worried about what that's going to look like in the future, right? Well,
I think that's part of it. I think the other part is, as you're looking at the population is also important to keep in mind as far as the age of the population, right? So maybe people that are of different generations view investing differently, and as people mature, then they have money to not just invest in their 401k and in the stock market, because remember that's money that you can invest a little bit at a time, right? You don't need $500,000 to invest in one chunk. you can invest every paycheck. So as people's portfolios mature, then they have other choices, and they include real estate in that portfolio as their portfolios mature.
We are not saying you should run out and buy a house. Now's a good time to buy. We've never said that. We're just pointing out that when somebody makes a video and says, oh, this person just bought a house. It was funny because one of the Crash Bros did a thing where he said, oh, this person just bought this investment property and I did all the math and they're losing $6,000 a year in rent versus their mortgage. Well, first of all, he doesn't know how much they put down. He's just guessing, right? But what was funny was I did the research in that market. The median home in the last year is up $22,000. So they bought the thing a year ago. His claim is that they've lost $6,000 in their upside down rent because the rent is purportedly less than whatever their mortgage is, but they've gained $22,000 in equity of the house. So just be careful when you're watching the Crash Bros.
Right. So I mean, if you're sitting there going, yes, but those are unrealized gains, you're absolutely right. They are unrealized gains. But at some point, those will be realized gains. The nice part about unrealized gains is that at the moment, they're not taxable.
And then the other thing too is, just remember this, that person who you laughed at for buying the house 2 years ago at 7.5% and paid $450 for it, and then now you realize that it's 5 something, and not only is it $500,000, it's, if you want to go buy the same house, you have to pay $50,000 more. But the other interesting thing is that, remember, they probably can refi, and they at 7.5%, they can probably get something under 6%. The VA rates right now are about 5.6, and the 15-year fix right now is about 5.1, 5.2.
Right.
So if you're interested in doing a refi, and we just had a little refi boom like the last 2 weeks. Like we had the most number of refis in the last 2 years just happened.
Right.
Yeah.
Okay. So fun times. Any more charts?
No, I just wanted to point out that, we have this data that shows how incredibly hot the real estate market is, how incredibly competitive it is for buyers, and it's not likely to slow down just because some Crash Bro found one market where some builders overbuilt, and now there's like more houses that on the market than have been in that one town of 322 cities in the U.S. And that's one town is going to literally force everybody to sell that owns their house free and clear.
Right. Clearly, that's not the case. All right. So if you're thinking of buying or selling, please reach out to us. We would love to help you, whether it's here in Las Vegas or somewhere else. We've got help for you. We appreciate you watching. Please remember to like the video. Like it. Subscribe, hit the notification bell, share the video, leave us your real estate related comments, and we'll see you on the next video. Bye.
Bye.